Hey everybody, Randy Patrick here, Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. And the reason being because every day it seems like something material is happening in the housing market and it's changing and lots are going on and it's tough to keep up with. So that's the scoop. Well, today we're going to get involved and talk about sort of the major news item that happened yesterday that everybody is sort of looking at. And NAR, which is the National Association of Realtors, released their existing home sales report for the month of December, end of the year 2018. Very interesting and surprising, and it caught a lot of people off guard. So that's the scoop. So as I mentioned, NAR, National Association of Realtors, reported that the existing home sales declined in the month of November, and 4.99 million units were sold across the country. This represented a 6.4% decrease from November sales and a decrease of 10.3% when you compare year over year in December from 2017 to 2018. So a 10.3% year over year decrease in sales, which to me is pretty material, all right? And just realize that none of the four major US regions, and NAR groups them like Northeast, Midwest, South, and West, well, none of the four major regions saw sales activity gains, which is quite interesting. And another point to make immediately, because people, of course, would look at this as a reason, the government shutdown has not had an effect on December's numbers. And this was a statement from NAR. I guess you could say that, truly, that, December sales represented, contracts signed in October, November, maybe early December, etc. So the government really hadn't started the shutdown process until later in December. So basically, this does not affect those numbers. However, January could be a different story with respect to, FHA and Freddie and Fannie and things like that. So that definitely will have some impact on January numbers. But as far as we're concerned, December was down just because December is down. Now, just realize this is the lowest level in 3 years. All right, the lowest level since November 2015, as far as sales are concerned, which I think is pretty material. That's 3 years ago. Now, if you want to break down the numbers a little further, first-time home buyers accounted for 32% of sales, and that was pretty much the same value as a year ago. All cash sales accounted for 22% of transactions, and that value was down 16% from a year ago. Distressed sales, they represented 2% of all of sales, and that was down from a 5% level a year ago. And just so we're clear what a distressed sale is, the NAR and everybody else really out there qualifies distressed sales as, basically foreclosed homes or REOs. REOs mean real estate owned. So when the lender forecloses on a home, it goes into their real estate owned inventory, and they will sometimes sell some of those on the marketplace via real estate agents online, etc. So that's part of it. And the other part is short sales. So short sales are not foreclosures. They are pre-foreclosures. Homeowners still have title to the house, and they could still be in the house, for as far as I'm concerned, whatever the deal is, but they haven't lost their home to the foreclosure process yet. It hasn't been foreclosed on, so therefore a short sale actually avoids a foreclosure, which is helpful, which is something that we do. I do a lot of that in my neck of the woods here, and we'll talk about that in the future. But the point is, only 2% of the overall market sales, which is a very low number, was accounted for by distressed sales. And that's another discussion we can have with respect to opportunities. So if we delve a little deeper in this, if you look at the regions, the Northeast decreased about 6.8% year over year. Midwest fell 10.5% year over year. The South 5.4% year over year. But the biggest loser was the West, who dropped 15% year over year with respect to the sales volume. And again, as it all drops for year over year comparisons. Now, the December decline was the biggest year over year drop since May of 2011, which, if you think about it, we're still kind of in, the tail end of the housing crisis in May of 2011. So we hadn't hit rock bottom as of yet. So that's the biggest year over year drop since that point in time frame. Other interesting statistics to note reported by NAR is that unsold inventory up 6.2% from a year ago, so slowly rising. The supply is now 3.7 months, which is up from 3.2 months a year ago. And the supply has increased now 7 months in a row, which is great. Days on market to sale or contract jumped from 40 to 46 days, so it's taking a little longer for houses to close out or get under contract. Now, interesting to note though is that the median sales price did rise, 2.9% year over year, and that 2.9% represents the slowest or lowest growth rate in home values since early 2012, which would be a 6-year low. So if we sort of look at this as taking, supplies increased 7 months in a row now. It's taking longer for homes to get sold in the process. Median sales price did rise, but a very, very small amount. And that is the lowest growth in over 6 years. So things are slowing down. That is the point to all this. And I believe that, why has this occurred? Well, there's a lot of reasons going on. And, could this be the calm before the storm? I think so. I think that, things are kind of in a weird transition, place in real estate. I mention that quite often because these months at the winter months are kind of like a transition month. Like not much happens normally. Sales are always adjusted, etc. But sales drop way more than the economists felt they were going to drop, which is very, very interesting. So what's going on? I think buyers are digging in and they're waiting to ride this wave out of high unaffordable prices and higher interest rates. The demand is obviously weakening. Maybe the next segment that everybody wants or wishes to be buying homes to prop the market up isn't as interested in homes going forward now. Maybe there's other financial issues or constraints afoot that's keeping people from buying homes. This December number has the realtor groups all confused, and they say that the decline is hard to explain. And the reason being that the latest numbers do not reflect the lower current mortgage rates. So, you got to understand that we did see a little bit, rates kind of peaked in October, November-ish. They took a little bit of a dive there, end of November, December, but that wasn't enough to get people to come to market, etc. So their comments also are maybe it's the decline in consumer confidence with the housing market. I think so. I think buyers do not want to pay premium prices in different parts anywhere, but specifically in certain parts of the country where it's so unaffordable, it's ridiculous. And also I think it's overall consumer confidence because we've seen stock markets up and down. We've seen other, bad news with respect to layoffs. Even though, the growth or job growth seems stable, I don't think it paints a picture of the true numbers and the true employment and the true value of your job these days and what you're earning. Also, I think the fact that buyers, and I've said this many times before, buyers are much more aware of what's going on in the marketplace. And here's an interesting quote from one economist that says, if potential buyers are aware that home prices are falling, because we all are, then why would they purchase now to see their new home immediately depreciate? That doesn't make sense. And, no one wants to catch a falling knife, which I agree. So, unless you're desperate to buy a house, you can continue living in the current home you're in or renting, whatever that may be. But I think this is the point, is that everyone doesn't have confidence right now in the housing market and where it's going to go. We'll put it so there's no confidence in if it's going to increase and go up. And realize that, some of the people out there like, Fannie and Freddie, like National Association of Realtors, like CoreLogic, like the big players who really want and wish the real estate market, would grow. They were talking about 4.5%, 5%, maybe 6% annual growth expected for 2019. Well, that's certainly not double digits we've had for the past few years, and that's going to be muted now because we're not seeing this. We're going to see a lot of things happen, and I believe we've plateaued, and we're going to start to see declines coming in the next couple of months. And again, I love that. No one wants to catch a falling knife. So exactly, why would you buy in December knowing that more inventory is coming on? There's more choice and selection for you. Buyers, you can look online. And again, this is the thing. It's not like we're in a vacuum, not knowing what's going on. Buyers and everybody, all of us, have access to Realtor.com, Zillow, Trulia, all the other websites that talk about homes, and you can look at home values, and you can play around with the statistics and point and clicking, and you can educate yourself pretty effectively and decide for yourself what makes sense for you in the location you want to be in and the price point you want to pay. That's kind of the cool thing. And here's a quote from the senior economist of Trulia. Speaking of Trulia, she basically said, looking ahead to 2019, expect weaker existing home sales as the new year gets ushered in a government shutdown and worsening and worsening economic uncertainty. So that basically, that's really consumer confidence right there. So in other words, she's telling us, expect weaker home sales. So for me, weaker home sales mean more seller competition, which means lower prices, which means I can be more savvy when I buy. I can place lower offers, or I can ask for concessions, or I can ask for other things with home builders, or benefits, or upgrades, or whatever. So what's happening now? We've peaked. We peaked a number of months ago in the summertime with our home values, and now we're plateauing, and we're working down that way now. It's actually happening right in front of our eyes right now. And exactly. So what do people do when their confidence is down and things are not clear and certain in really any market? Well, what I have found is that they hunker down, which means they freeze, they don't buy, they do nothing, and they wait to see what happens, and they wait to see various signals or changes in the marketplace before they start to feel better and they can make up their mind as to when to pull the trigger, when to buy this. This doesn't happen to be with housing. This can be with auto sales. It could be with appliances. It could be with anything you want to purchase. I mean, you don't purchase retail before Thanksgiving time with all the sales that go on. You just don't do that. I mean, that makes sense. You look at and wait for the sales. Kind of what we're at right now with respect to housing. We know that housing is going through a little capitulation right now. The expectation is it's going to drop a little lower, and we're going to see some opportunities here. So, and again, if we take a look at that, what the issues are with respect to what NAR says on their economists is where we're hurting is in the affordable housing market segment. So I take a look at the information supplied by NAR here. They break it down, into dollar value categories. So really, the bulk of sales happens in the 100 to 250,000 range. Essentially, 40% of the sales happen in that kind of area. And that, I think, on a normal market across the country is what I would call affordable housing. So that's where a lot of the activity is, but the majority of people need to buy in that range. And if they don't have sales or homes available, they either have to go up a tier, and maybe that stretches them, or is difficult, or if they can't go up a tier, then they wait and they wait to see what happens, or they keep renting and they wait for future signs. Now, I fully realize that in places like California, maybe your affordable housing is a little higher than this. But what it boils down to is the fact that, every region, every location, that's the bread and butter homes. That's where the most people can afford. That's where the most homes are wanted or needed. And we don't really have those available. So even though more inventory is coming on in the marketplace, we still are getting a little bit pinched in the affordable housing segment. That's where the inventory needs to be, and it's not coming on fast enough or enough to meet the demand. So that demand segment pulls back. It does have some trickle-down effects to other segments in the marketplace here. So just keep that in mind. And here's an interesting, I guess you could say, quote. I do look at a lot of websites and a lot of different economists and stuff like that. This is Wolf Richter. He has a website called wolfstreet.com, talks about the economy, has a housing bubble section. And this is really interesting. So this is his first comment. He says, housing markets move slowly and normally and play out over years. Big sudden moves, even in local markets, are rare. On a national basis, Housing Bust 1 took over 5 years to play out and was helped along by over 10 million job losses and a banking system that was teetering on the brink. So that's right, that's what happened in the last housing crisis. And I don't know if people were around to watch it or were paying attention to it. I've been through this, that housing crisis from start to where we are today. So I've seen it, participate in it from both ends, and really I'm comfortable with where we're going and where we're angling as we go forward here. Now, on this next phase, he says, this housing downturn moved into the scene in 2018, a year when the economy was strong and created 2.6 million jobs. This downturn has been triggered by sky-high prices and rising mortgage rates, not by a recession or job losses. Those events, unavoidable as part of the business cycle, are still waiting in the wings. So what he's saying is that we're starting to see issues now in the housing market, and we're still going to have recession and financial issues coming in the near future. How near that is, maybe it's a year, maybe it's a year and a half, who knows? But the point is, the worst is yet to come. And housing now, I think, is leading the pack in some of these issues, and it's really us to figure it out and manage and sort of work your way through that. So where do we go from here? Well, essentially we wait. And why? Because it's still too early to see exactly what's going on. We're probably going to see some bumps and some valleys along the way as inventory comes on, as buyers adjust. We'll see where the rates go, etc. Now, on a personal note, I know and I'm pretty confident as to what's going to happen, and I'm preparing for it, and I'm bullish on where the market's going. So I'm all in, and I do think it's going to be a repeat of what happened before with some little nuances and differences here and there. But ultimately, in the end, we're going to see much more material decreases in housing values. Now, I know that some people, who haven't been through it or weren't involved or paying attention the last time through, need to see validation for this. They need to see it concrete before they go, okay, I see what you're saying, or I agree with you. And I get it. Not everybody, was paying attention at the last housing crisis or was involved from a real estate perspective. So I get it. It's not a problem as far as I'm concerned. But I think, as I said, as always, the difference is that the information we are seeing is much more readily available, number one. Two, it's much more detailed, and we're getting it on a daily, hourly basis if you so choose to listen to it. That's what I'm doing. So I now see this happening, and I watch what's going out there. So I see, the government and the big businesses that need the housing market to grow and accelerate and rise in value, try to fool us and say, hey, it's okay, don't worry about it. It's just a soft landing, nothing's going to happen, etc. We see a lot more economists saying, no, we're going to have issues here and be prepared for it. We have certain economists who are sort of stating that, but not coming out and actually, saying it right out loud for the public, because I think that would cause chaos, and they know that. So you've kind of got both ends of the spectrum here, and it's up to you to figure it out. So again, as far as I'm concerned, I've seen it happen before. The signs are pretty much there, and we maybe I think we're backing into it a little differently. But when you start looking at the reasons why we had a housing crisis before, well, the reasons are kind of happening now, just in maybe in a different order, which is interesting. So how do you work through this? Well, you look for deals, right? Again, you might wait a bit before purchasing a property, and I'm not giving advice. I'm just saying you might wait to see where things are going before you pull the trigger. What you might want to do is look for sellers who need to sell, who are more desperate, or who are distressed, because typically distressed properties, you're paying less for them if you can close quick and take it off their hands. There's always a reason for that, all right? We look for meaningful discounts from sellers. As more inventory hits the marketplace, because it will, we will start to see more discounts and price wars between sellers, because if I list my property in my street and you're down the street and you're across the street, we all want to sell and cash out and get what we've earned over the past 5 years to a decade. We want our equity, but now I have to compete with you, and I want to sell because it beat the pricing before you have to drop yours, etc. So we're going to see a lot more activity going on. But I said, look for distressed sales. They're historically cheaper, and that's kind of what I'm looking for, and that's what I do. But in the end, we're at the point where we haven't quite seen the definite definitive pathway of the real estate market yet. We see the signs as to where it's tipping. So it's gone here, and we're starting to see this now. So when you have the sort of the slowest in 6 years sales value increase, when you have other locations across the country putting on a ton of inventory, that means something. We weren't paying attention to all these signs last time through. Now I think we should. So in the end, it's up to you to make your decision. I'm just here to give you the information to help you along. Again, thank you for the views and the likes. Thank you for the comments and responses. If you would like more information, you can always contact me directly. My email is in the content section there, the video. I have my Distressed Property Summit coming up in a couple weeks now. So if you're in the greater Tampa Bay area, you might want to check that out, where I go into discussion about all the things we're talking about here in more detail, and about how you can navigate that in a downturn housing marketplace. So, and as I always say, if I can help you with your real estate home purchasing needs or investment needs, drop me a line. Some of you have done that, and I'm certainly happy to engage, and I will engage if number one, it makes sense for me, and two, I can truly help you. But we can have a discussion and go from there. So you can contact me, email me directly, and that's not a problem. We'll get back in touch with you. So again, thank you very much, and we'll look forward to another video episode probably early next week, and as the housing market turns. So we'll see you later.